It's been about 5 months of investing in the S&P 500 and just investing in general. If you guys aren't investing money, then I don't even know what the hell you guys are doing. You're wasting your money, you're wasting your time, and you know what they all say, time is money. So this is what you should be doing. And if this is the first time you stumbled across this channel, then I'll show you guys why investing is the key to wealth. So in the beginning of this year, early January, I decided to open a non-registered account. You see up here, it says non-registered. I already had it, but I just never really invested in it. I did invest a little bit, but I took off money, but I decided that I want to invest it. And I also want to show you my journey of investing $100 a month and show you guys the progress basically. And what compound interest can really do by just putting your money and just not even thinking about it. And that's what I've been doing. I haven't even checked this account in a while, other than making my previous video, which was probably 2 months ago or 3 months ago. And now I have about $500 over here, $512. This is the past month. It is up 12%, and which is $55 in the past month. I am gonna go to all time. I am only up $34 with a 7.13 return. If you check this graph here, you can see in the beginning I put a lot of money in here. I don't even know how much it is. Well, I put like 2,000 I think, and then I took it out, and then yes, you can see that's history. I didn't invest at all, and then yes, now it's investing and going up. In this account, I only invest in the VFV, that's the Vanguard S&P 500. That is basically the US market, the top 500 companies in the US. Since I am Canadian, I use VFV, that's the ticker symbol. Right now, my account is up $512. I am gonna take out the calculator just to show you guys real quick just how it is. So I am gonna take 512 right here, 512.20. I'm gonna be exact, and minus 34.09. So I invested $478 the past 5 months, and it grew to $512. It's only $34. That's probably nothing to you guys. $34 is nothing. But if you think about it, I can withdraw that right now. I can buy myself a nice cup of Starbucks. I don't know, pizza. I can go to sushi and buy a nice meal or something. But you get the point. I'm not going to do that, obviously, because it's not much. I'm going to let it compound. I'm going to let the money keep growing. That is not a lot of money, but eventually in the future, it'll be a lot of money. Over the years, over 10 years, 5 years, whatever you want to do it. And this, if you look at the average retirement, which is the age of 65, then yes, I can invest this amount for 40 years, 50 years, and it will grow to a couple $100,000. I showed you guys this before, the compound interest calculator. You can just find whatever calculator you guys want. So I would just say I initially put in $100 because I think that's what I did. Do weekly, $25 every single week. And then my interest, I'm going to give it a 7%. Usually the S&P 500 or VFV usually gives 8 to 10% yearly. And it doesn't mean it's always going to go up like that every single year. It's because sometimes it goes down, sometimes it just keeps going up. It really depends on the market, but I'm just saying over time historically is around 8 to 10%. Factoring in inflations, I'm just going to give it 7%. Interest is compounded yearly. And time horizon, let's say you're 25, so I'm gonna give it 40 years. That'll be when you're 65. Now I'm gonna calculate this and see how much it grows. Total value of your investment is $269,000. Your total interest earned is $217,000. What does that mean? I'm gonna go to this monthly table right here and go all the way to the last row, all rows, go all the way down. Just remember what this is. It says total investments is up here, the second row, and then the total interest is this row right here. There's actually a lot of weeks. Go all the way down to the very bottom. This is basically when you're 65. You invested over $52,000 over the course of 480 weeks, which that is 45 years. And then the total went up to, or like the amount of interest you earned was $217,000. So if you do the math, I'll show you guys the math just because it's more easier to see. I'm gonna bring up here 52,000. And I'm gonna times that by 3, or I mean like 4, and that'll be 208,000. It's not exactly 4, it's over 4. So basically, you put in 52,000 in over the course of 45 years, and you basically quadrupled your money in over that time. Tell me where else would you be able to quadruple your amount of money? Yes, of course, you could say gambling, you can say casinos, you can say betting, lottery, all this random type of stuff, real estate. Yes, they're all good things to do. You put your money there and then you can gamble your life away, but that's not safe. That's not for your retirement. And that's just really risky. A lot of people don't want to put that much risk. They rather just put it in a investment like the stock market and just let it grow. I don't ever have to watch this. I can just leave it in my account and just let it grow. $25 every week in the stock market, or I can just say 100 a month. So it's simple. You for extra money, you put 52,000, it went to 217,000, or that's how much it grew, but your total investment at the end is 269,000. That's only putting $100 a month. That's not even a lot. Your car insurance is more, paying your car bills is more, paying your house bills is more, maybe even your phone bill is more in a month. To live off of 270,000 for retirement is not really anything. That's why you would want to put a lot more. And this $100 a month that I'm doing is just to show you guys, and also for me, to invest slowly in the market. I am also investing in my TFSA, which is a tax-free saving account, but this is just the extra money I have until I max out my TFSA, or just when I have more money, then I'm able to put on my non-personal as well, or just a bit more money than $100 a week or a month. Going back to Wealthsimple, so right now it is only around May 16th, May 18th, and I only have 3.4 shares. It's not a lot because VFV is around, I believe, $150 around there. Over the course of $25 every single week, it added up to 3.4 shares over the course of a couple months. If you guys also remember the first two videos I was making, VFV was pretty high. It was around like $150 something, and that's why I dollar cost average. I don't wait to time the market. I just keep investing over time, and eventually when the market dips, when it goes down, I keep buying, and now when it's back up, I'm somehow green now. Before I was red, before I was like down some percent, but now I'm back up, if you guys remember watching those videos. And that's the power of dollar cost averaging. Just to show you guys, going all the way down, I gotta load all this, but January 24th, just for example, I'm gonna go to click this. The amount that I bought it at VFV was 155. So every week I was buying it, it was around 155 because it was just more expensive back then. Now the market was dropping a lot over the course of a couple months. I can go to March, it is only 143. April 4th was 129. So that's a really good dip. That's like a $20 drop from the past, or when I bought it at first. You guys always want a dollar cost average, and once it goes down a lot, you can always do a lump sum payment because you can buy a lot more shares once it has a nice dip. Let's say May 2nd, it is back to 139. So before last month was down a little bit, now it's going back higher. The market's reversing up, so that's why the market is going higher. There's nothing too much about it. It's just buying shares every week, just putting on my phone, automatic purchases, automatic deposits, and it just buys every time. And what I like to say is, how you do one thing is how you do everything. Keep staying disciplined, keep staying consistent, keep investing, and let's just get 1% better every day. And I'll see you in the next one.